Hey, we're going to get rolling here today, and last week we had weather markets, and they're continuing in here right now, and they are very challenging. And I just got to tell you, when I was doing the opening calls here last night, and I'm looking out my own backyard and how dry it is, and then I look at our 10-day forecast with really no rain in sight. I mean, I'm thinking corn could be up 10 to 20 cents. Then when I saw world wheat prices were a little bit lower, I had to temper my enthusiasm, say, you know what, we might not be able to push up that much, maybe call this thing a nickel higher. Then we roll into the day session, and the market wants to focus on a 3-week out weather forecast where it hints of a pattern change, and then before you know it, corn's trading a dime lower. Those are the challenges of the weather markets, and this is what we're going to be facing as we move ahead. When we look at the DC23 corn chart in front of us right now, the purple line is a 50-day moving average, and as you can see, in May we went down to about 490. We talked last week on how we could get a 10% rally just on a normal year. That would get us back closer to the 540 level, which is that short red line on there. We had a nice recovery. Now, many people want to compare 2023 to what we had in 2013. What I'd like to point out in 2013 is we had a May low around 515. Then we had a May-June high around that 570 area, about a 10% rally, similar to what we just saw here on the DC23 corn crop. Now, as we look ahead on DC13, you can see we got closer to the 4th of July. You got a non-threatening weather forecast. The market broke lower, and we trended sideways to lower through the fall harvest time frame. Now, another year to take a look at is 2012. That has gotten some reference points as 2023. The month of May is as dry as it was in 2012. In 2012, we put a low on around $5, had a 10% rally in the month of May, got back to 550, and then we really traded $5 to 550 through mid-June. The weather forecast was threatening. We broke out on June 18th. The rest is history. So what are we going to see here in 2023? You can make an argument either way. Our read right now is this 490 low is going to hold in the near term, but we also have to say probably 540 is resistance. If we break out to the higher side, we think it needs to occur by June 20th. On the other hand, if we get to the 4th of July and we don't have threatening weather in place, you probably could see more of this market falling into pattern like what we had in 2013. The big thing we want to point here is after the 4th of July, you really got to go with the trend. If the trend is lower, it's going to be a slow grind down. In 2012, though, 80% of the rally occurred in the first 6 weeks of our breakout. Now, as we want to wrap up here today, if you want to go 2012 or 2013, hey, take your pick, okay? We can make solid arguments both ways. We've had comments here recently that options look expensive. We're not doubting that they're expensive. We're not going to say that they're cheap. But when you consider the premium that you got to pay, you got to look at the potential volatility that we're looking ahead at on this market. Again, our bias right now is that if we get a breakout to the higher side, it needs to occur by June 20th. If it doesn't occur by then, we're going to be really, really concerned. What is your plan as you move ahead? Are you a producer? Are you an end user? Do you need to make some cash sales? Do you have to protect cash purchases? Those are things that you have to decide. Fully expect some volatility moving ahead, and we look forward to bringing you up to date every day on our daily report. As things change fast, we'll send you a text or send out some short videos. Have a great day.